Neo down 50%. What's doing? This company is out the door. Forget about it. It's losing money like hotcakes. There's no show for this company to turn it around. Can they spin those wheels? Get that electric vehicle flying back to Earth? They are absolutely a disgrace at the moment. The hype stock is totally gone now. This stock is plummeted to low figures. Can it get to $5 maybe? Neo, are they going to go bust or can they turn it around? Well, I'm here to give you a stock analysis on Neo. Let's have a look at the current metrics from revenue to net profit, PE ratio, long-term debt, free cash flow, return on invested capital, and so much more in this video. And if you stay to the end, I will give you a possible intrinsic value of this company, what it's worth, possibly, and where maybe an entry point in. Not financial advice. Do your own research before you invest into any stock. But let's get to it, a Neo stock analysis. Yes, well, first off, let's look at revenue. It's $7.1 billion in 2022. It's up from $5.6 billion in 2021, but question marks on if that's going to continue. That is a big question mark. Earnings per share minus $1.51, which means there is no PE ratio, which is a big question mark over buying the stock, and it has been for a while. And profitability has yet to arise, which is a problem if you're trying to invest into this company, because if they keep losing money, they'll end up in bankruptcy. So that's the question mark on this company if they cannot keep issuing more shares or get more investors involved. The market cap's around the $15 billion mark, but it can be wavy from the time of recording. Short interest is 7.4%. I'm surprised it's not up to probably 10 or more. Clearly no dividend with this company. The 52-week range, where we're around the bottom of this range at the moment, $7 all the way up to $17.50, and it was a lot higher before then, as we know. Full disclosure, I used to own Neo. I sold out, and I thank God I did. Because I'll be it doesn't mean in like 20 years time it might not have been a good investment, but for me, I've moved on to Facebook and happy days. Back to Neo, the assets versus liabilities is $12 billion in total assets, which is down from last year, so 13 billion, so a little bit, nearly 14 billion, so a bit of selling off there, and the liabilities is 9.5 billion. So it's okay, but it's not fantastic at all. But the free cash flow, it just gets worse and worse for this company. Minus $2.3 billion. Yep, $2.3 billion, folks. Not good. And when the long-term debt's not actually too bad, 903 million. But there's all different metrics, folks. Now, I don't know why this one's a bit funny, but some people are recording it at 2 billion long-term debt. So I'm not sure which figure is correct. 903 million is not too bad. If it's 2 billion, well, then we're starting to scratch my head a little bit with this company very much. And return on invested capital of minus 48%, folks. Yes, minus 48%. Dear, oh dear, they are just funneling your money straight down the toilet. And just to add insult to wound, their shares outstanding continue to rise at 1.7 billion from 1 billion in 2018. So they are absolutely diluting you all the way to the moon. Neo, so the stock, for you to read all these metrics right now, this stock is not for you. But if you think there's a miracle, they'll turn it around at some point, then we have to go deep dive into it. But Neo, what can they do to make themselves more profitable and more likely that the shares will start to increase? Well, first of all, they need to get to profitability. So how do we do that? They need to sell more vehicles at better prices. But their problem they've got at the moment is Tesla is smashing out all these cars at not quite cost, but not the greatest revenue share. They don't care. They're just trying to get more and more Teslas out the door, so then they will continue to get returning customers over time. So they're playing the long-term game for short-term pain, which is not necessarily a good thing for Neo and Rivian and all these other companies trying to compete with Tesla. because they're going to go into loss, but then they're gonna run out of money and bankruptcy. That's what's going to happen to a lot of these companies. And Neo is in that danger zone. It's not quite there in that danger zone yet, but if they don't turn it around soon, and they keep getting less negative free cash flow, long-term debt continues to go up, this company is a bankruptcy player for sure. It's nowhere near there yet. Well, not nowhere near there, but it's not there yet because they're still at their nearly $15 billion market cap. But if it halves, then look out. Danger zones, and we have a recession coming. It looks more than likely. So get yourself buckled up if you're in the stock or looking to invest in the stock, because it could be a $5 stock coming soon. But let's have a look at what the intrinsic value of Neo possibly is. Yes, I use a simple calculator here, Trade Brains, for a Graham calculator, just to give you a simple idea, and then you can do a bit more on top of that. So this includes share price, earnings per share, growth rate into the future, and the current bond yield. So I'm going to go $8 stock in Neo. At the moment, it could be higher or lower from time of recording, but just to give you an idea of where this share price is. So if it's at $8 and minus 1.5 at a growth of 5%, you're looking at a minus $29 stock. And you're paying $8, you're kidding me. They should be paying you to buy the stock. Then if we go to 10% growth rate with the same minus 1.5 earnings per share, then you're looking at a $44 minus stock. So at the moment, all the metrics say no, not financial advice, because I could be completely wrong and it could just turn around like that. But if you look at it just sneaking into the earnings per share positives, it's 0.022 at a 10% growth rate. Now we're starting to look at what is it, about a $6 stock. So still not even fair value. So that's where it is. If they just get the profitability, you're still paying overs. But if they fly to $1 earnings per share and they boost their growth rate to 15%, then you're starting to look at a $40 stock. Now you're starting to talk. And people were looking at the stock at 200. Well, for that to happen, it's a long way from here. They have to get their earnings per share up to probably like 2.5 with that sort of growth rate. So they're a long way from any of that sort of profitability stuff. And with the net profit, sorry, I don't think I talked about net profit. The net profit is 2.1 billion, minus 2.1 billion, sorry, and expected to probably be minus 3 billion in 2023. That is not good. They have to turn that around, and they have to turn that around smart. If they want to be a big player in the EV game, they're going to have to get their calculations. They've got to get their costs down and get to produce great vehicles at great prices so they can continue up the ladder. But at the moment, they're going down in a big way if they don't flip it around. But to me, if I was looking to invest in the stock, simple as this. At the moment, it's overvalued. You might as well be at $1, and then it might be worth taking the punt right now. But if they do turn it around, you're probably paying near enough to fair value if they turn it around. And if they absolutely smash out of the park, why not? Yeah, then you're looking at a decent return. So that's the risk you got to take with the stock. It can easily go to bankruptcy, or it can turn around and be a beautiful multi-bagger for you. That is the risk with the Neo stock. So do your own research before you invest into any stock. Enter at your own risk. But thank you very much for joining me here at Barry Charles. This is a stock analysis on Neo, giving you a bit of a chance of looking at the key metrics with intrinsic value. And hopefully you got a lot out of this video. Remember to like and subscribe to the channel and share it with your mates. Have an awesome day out there, my friend.